So welcome everybody to a Tearsheet webinar. We started this series just a few months ago, and we're finding a lot of interest in the webinar series that we're doing. I'm your host, Zach Miller. I'm the editor and founder of Tearsheet. With me is Finicity's Lisa Kimball. She's the VP of Strategic Partnerships there. What we're going to talk about tonight is the new journey, how empowering customers with financial data creates richer customer experiences. I'm excited about hearing from Lisa tonight. This culminates really a month-long series that we've been doing on the data aggregation industry. It's something we really delved into. We had a series of podcasts, a series of articles about it, and our intention was this would sort of bring and tie everything together, looking both backwards, looking at present, looking at the future. This is really what, to me, this is the cutting edge of modern day fintech. A little bit before I hand the reins over to Lisa, just to give a little bit of an itinerary tonight, we're pretty good about sticking to that hour-long itinerary. So we'll do our best to finish within the hour. We know everybody's busy and has other things to do during the day. We're appreciative of the time you spend with us. There'll also be a chance to ask questions. So I think, to me, this is one of the most interesting and most engaging parts of these webinars. We have an expert like Lisa on the show, and we're able to ask questions. So and that's unscripted. So throw your curveballs. Those will be moderated. So there is, if you look in your webinar panel, there's a questions section there, a questions tab. Submit those to me. I will then ask them in the final 15 minutes of the webinar. I'll be able to ask those to Lisa, and we'll get those answered. I also like to thank Finicity for being a great sponsor of the series. I appreciate it, guys, and looking forward to hearing from you guys tonight. And more than that, I know people emailed me beforehand. We do record all of our sessions. It's being recorded right now, and we will make it widely available to everybody afterwards. So if you didn't get a chance to listen to the whole thing, you have to drop off at some point, you'll be able to log back in. We'll send out a link as well. So if you're already signed up, we have your email address. If you have colleagues that want to watch the videos as well, feel free to sign up as well. And without further ado, I'd like to introduce Lisa Kimball. Lisa, you want to introduce yourself?
Sure. Thanks very much, Zach. As Zach mentioned, I am the Vice President of Strategic Programs here at Finicity, and I came to Finicity about 1.5 years ago after spending the bulk of my career in technology strategy and technology delivery in banking. I'm really excited to join the Finicity organization because it aligned so well with my personal passion around consumer empowerment. And this is just a really fun time to be part of the fintech environment and the driving force behind consumer empowerment in financial services. Finicity's really got the consumer at the hub of everything that we do and think about. So it's absolutely my pleasure to speak about the consumer journey and where it's headed today.
So I think that's one of the coolest things, and I know we'll delve deeper into that concept today. But that consumer empowerment, I know that's something that's very close to the guys at Finicity and very close to the whole concept of data aggregation, empowering the customer. So maybe you can start us off with I guess, setting the scenes. What are some of the trends going on around the customer experience, and how does data relate to them?
Yeah, we really think about the convergence of a couple of trends that are enabling the digital revolution in financial services. If we start out thinking about consumers and the way that they are interacting across the board, all kinds of products and services, they're not only willing, but often prefer to do their research, compare alternatives, and absolutely to transact. They want to do that easily and quickly, from anywhere, and often from a mobile device. So that expectation that was once about receiving email on a BlackBerry, I'm sure we're all aware, has transformed and means that the demand is that any kind of transaction, any kind of
Looks like we lost Lisa's voice for a second. Just stay with us. We'll get Lisa back on. Sorry about that, everybody. Sorry, guys. It looks like Lisa dropped off. Trying to get her back on. Just bear with us. Webinars are always exciting to see what happens. For anybody who was on our webinar series, the last time we did a SMB lending series, we had Rob Frowine, the co-founder and CEO of Cabbage, and just had a terrible time connecting. You're back, Lisa.
Hi, sorry about that.
No worries.
We may be having a hard time sharing the slides.
Okay.
Yeah.
So maybe what we'll do is we won't show the slides. I can include the slides when we send them out, if that's okay with the Finicity people. And so we'll just interact like this.
Okay. Yeah, that sounds great. So I'll just walk back to the consumer experience. Not sure where I dropped off, but there's really three key trends that we see as driving this digital revolution in financial services. And the first is the consumer's willingness to do research, compare alternatives, and transact on a mobile device anytime, anywhere. And obviously that is evolving to not only a willingness, but a real preference on the part of the consumer to be able to do whatever they want from wherever they are. And being able to provide that kind of consumer experience, particularly in financial services, is also being enabled by the cloud storage and ability of the mobile devices to handle a very large, rich data set quickly and easily, and again, accessible from anywhere. And this has allowed the expansion of the data sources that are available for use in this area. And then finally, that leads to the ability to incorporate new, not only those new data sources, but advanced analytics and machine learning to distill large data sets and provide real-time analytics around that data. So these three combined really pull together to provide an entirely new experience for consumers, and I think are driving a lot of the investment and opportunity that we see in the fintech and digital space for other financial institutions.
That makes sense. And so with that as a backdrop, one of the things that we found when we were writing and doing the research on this industry was we no longer talk about data, we talk about consumer permission data. Can you help explain what's the difference and how that type of data can be used?
Yeah, absolutely. I think for understanding consumer permission data, it's helpful to start with an understanding of the process itself. So, and the slides, this is where one of the slides would be helpful. I'll walk through it. Consumers permission the use of their transactional data. So different from other data sources where maybe consumers didn't realize that there was data being shared or what the data set was that was being shared. For consumer permission data, it's an absolutely consumer-driven permission for a specific use case or a specific purpose. Once the consumer allows and enables that data can be aggregated and analyzed by a data access provider, back to the AI and machine learning that really is able to distill the data into a good set of insights. And then that's exposed through a suite of APIs that can be consumed by other service providers. And this really enables broad insights that can very quickly provide verification of things like assets, employment, income, and for some use cases, detailed transaction information. Again, all of that coming back to the consumer specifying the use case and enabling the use of their data for that particular purpose.
Well, and I guess your answer alludes to the question I had next for you. But so how does, given that consumers are permissioning that data, how is it empowering them in a way, I guess, that hasn't before?
Consumers, I think, across a number of fronts. So first of all, access. Consumers absolutely have access to that financial data better than they ever have before. And this visibility provides them the opportunity to make decisions in real time about how they want to spend, allows them to improve their control over financial wellness and engage with applications that help them set budgets and really control what they want to do in the financial ecosystem. which brings me to control. Consumers are controlling the data, which is a really new concept in this financial services area. So the consumer, again, permissions use of the data for a specific use. They are key to being able to enable it for a service provider, and they remain very aware of what the data set is that's being leveraged. And then that leads us to the ability for service providers, financial institutions, lenders, the rest of the financial services ecosystem to create innovative platforms, solutions, and product sets that are a real benefit for consumers. So this can include more real-time information, quicker decisioning, and a streamlined process. And finally, all of this, I think, wraps together into a real push for better financial health for consumers. So, we believe that the ability for a consumer to have access to that data, leverage its use where they want it used, allows them to make smarter financial decisions, to understand more about their financial situation. And ultimately, the reshaping of financial services, I think, has this better financial health for consumers at its core.
So before we move on to the next question, I guess I have a follow-up question to that one. This is a new role for consumers, really. They haven't had this power and this capability before. I guess how far along, how comfortable are consumers at this point being able to do that? Again, it feels it's different than what we've experienced in the past.
Yeah, and we actually get that question a lot because sort of intuitively it feels like maybe consumers aren't going to be willing to permission their data for specific uses. They demonstrated from the partners that we work with and the work that we do here at Finicity, consumers are not only willing but have a strong preference in most cases for being able to share their data. It is really contingent upon there being a value proposition for the consumer. So making sure that the experience is faster, easier, that they have access to a better product set, is really key to whether a consumer is willing to share their transactional data in a way that a service provider can leverage. But given a value proposition for doing it, consumers absolutely prefer to quickly permission and then have maybe a response to, let's say, a request for a loan versus the traditional model, which would have them maybe going into a brick and mortar branch or filling out papers and sending that over. Those kinds of things. Consumers want the real-time update on the status, and they like the convenience of being able to just quickly and easily provide the right set of data.
Yeah, it makes total sense. So let's talk about financial inclusion. I know this is a big effort at Finicity. Can you explain how permission data can enhance financial inclusion, and maybe how it can provide better decisioning accuracy at the provider level?
Yeah. Another real area of passion for us here at Finicity is the way that this additional set of data can forward financial inclusion. There are really two key addressable markets when I think about financial inclusion. There's over 50 million people in the U.S. who have no credit file, or really a thin file, we would call that. And so the inclusion of additional data, consumer permission data, can help lenders to have a better understanding of borrowers and help those consumers have access to financial products that were maybe either difficult or impossible for them to have access to because they didn't have a large credit file. There are also close to 80 million consumers who have a credit score that's below what most lenders would consider prime, 680. And so the inclusion of additional data sets can provide more insight to a lender about borrowers who may have experienced financial distress, but who are improving or managing their finances in the shorter term in a better way. So essentially what that means is that a borrower that had a blip in their credit history, maybe due to some kind of medical event. I mean, there are, any number of reasons that may cause someone to have a problem, get into financial distress. Adding the additional data set provides a recency of transactional information, which is really predictive about where this person is heading And when you combine that with the base credit data about where they've been, it again provides the lender a really more robust set of insights that open financial products for people who didn't have access to them before, or better products for those consumers.
Right. So that was going to be my next question. Obviously, this expands the pie for consumers that maybe couldn't qualify or show up previously. But do you see that in your clients and the people you're working with? Do you see that expanding their product sets as well? Being able to access deeper, richer data, do you see them being able to deliver different types of products that they maybe wouldn't have done previously?
Yeah, and they're maybe not incredibly different products, but they'll open a different portfolio for borrowers with a different set of criteria. Absolutely think that is one of the elements that is a benefit for consumers, and also for lenders. And I'm using this term lenders. I just want to also say that people's credit history and financial information is used in a variety of ways. So for someone applying to rent an apartment or get insurance on a car, those are all other areas where people are struggling to have their financial history and their financial information included in a way that represents where they really are. So we're not just talking about providing additional lending products, but it's across the industry as a whole. The other aspect of that, I think, is really around consumers having that quick, the ability to interact very quickly with the service provider. So, maybe it would have taken a lot more time to underwrite or evaluate, get approved for a new apartment, let's say, and the ability to have that done very quickly. And again, in real time, I think is a benefit and helps financial inclusion as well.
Okay, that makes a lot of sense. You started to allude to this in your last answer, but how are leading financial institutions leveraging this data to improve customer experience, right? It's one thing to have the data, it's another thing to actually put it into action.
Yeah, we see that in a variety of ways, I would say. And I've hit on this already, right? Better signals. So we're seeing the ability to expand products to identify borrowers who are maybe have had a blip but are improving, segmenting different product offers, and then of course being able to offer more real-time product set. Also personalization, so having additional insight about the consumer is enabling a product set that can be personalized to the specific use or the specific case that the consumer is experiencing, and allows it a better set of product offering, and being able to leverage that personalized information to market and put in front of consumers the right product for the right time. We also see the speed of processing and operational speed as a huge improvement for banks and lenders that are leveraging this data. So again, instead of receiving paper, having to key that in, QC it, and then do analytics around it, being able to really do those kinds of operations in real time, again, opens up an opportunity for point of sale kind of transactions, a much quicker turnaround on transactions. The accuracy is improved in this data set with the analytics applied. So again, for lenders, that leads through the entirety of their process, but having a real confidence level and multiple checkpoints around data accuracy, and having real confidence about being able to know that what they're decisioning on is clear and accurate and complete, is driving additional use cases. And then finally, new business models are evolving here. I would say, the GSEs in the mortgage lending space, we see them absolutely adopting digital lending and using these insights, again, in order to streamline that process. online product sets are opening up and are more available here, and the ability to use the data in ways that conventional data, a conventional credit file, and conventional paper processing hadn't been available are all things that we're seeing from different partners of Finicity's and across the industry.
I totally agree, and that's something we've covered on Tearsheet. Just over the past few weeks, we've covered a couple times about the cycle times, particularly in mortgages, like, moving things from, from a single day to a single day, like on a closure or a week closure. That's a game changer, I think, in terms of speed. Are you seeing a lot of your clients, like, is that particularly a focus for them in terms of using this data to actually improve the cycle times?
Cycle time, absolutely. Yeah. And mortgage is, a great use case for that, because it has had a very long cycle time historically. Being able to shorten that cycle time, I agree with you, as a game changer across that industry. When we think about all of the pieces that need to go into a full transaction, a full real estate transaction, having the lending portions of that clear for the borrower, so that, essentially decisioning can happen incredibly quickly for the borrower. They don't get hit with surprises, requests for a lot of additional documentation following. That's the streamlining or improvement that's available there. And for everybody else involved in the transaction, for the lenders and the secondary market investors, obviously there's some operational efficiency and cost savings that are available. Their risk management, visibility, and the transparency of what's in that portfolio and status of the borrower is greatly enhanced. So I do think we see it absolutely across mortgage, and we see it in the other lending areas as well. So cycle time in mortgage has been weeks or longer. If we think about auto lending, it's hours, but it's still longer than most consumers want it to be. So, you could turn that in the auto lending or consumer lending industry to minutes instead of hours. That's a game changer in those areas as well.
Right. It almost takes like a financial transaction, turns into like an e-commerce transaction, right? Yeah. That level of quick feedback. Even if the answer is no, to know that it's transparent. I know it's now, and I know I need to go look to another provider. I think
absolutely
that's awesome.
And the other add-on to that for the consumer, right, as you said, even if the answer is yes or no, the transactional data, right, consumer permissioned, and the nature of the data is also going to enable a better experience for consumer education. So if you don't qualify, there's some clear and sensible financial management enhancements that a consumer can make, and they're understandable. Things like keeping positive balances in your accounts, keeping additional balances, or maybe some other input that can be provided, and it can be provided real time in a place where the borrower knows some action items, and then can circle back very quickly and easily for them when they're ready to check again.
Got it. So we look at sort of the opportunities that consumer permission data opened up. What are some of the challenges you're finding that your clients, your partners have in using this data?
I think challenges with respect to using the data, I think in two broad categories. The evolution into leveraging the data for existing financial institutions and service providers is definitely something that should have a lot of attention paid to it. So the organizational change that's required to get lending officers, frontline managers, et cetera, familiar with what's required to leverage the data, how to walk the consumers through what they are not permissioning, and really how to incorporate that holistically. I think that organizational change element for organizations that are adopting digital consumer permission data should not be overlooked at all. It's a really critical element. And then the second thing that I think is really key, or can be a challenge for adoption, is choosing the right partner. So this space is evolving really quickly. There are a lot of different players, and I think it's important to really consider what is not only today's use case, but for a service provider, where are you heading next, and making sure that you are selecting partners in this space that align with the potential future use cases, because it'll be much easier to pick up an additional product or feature from an existing partner than it is to have multiple partners for consumer permission data, or to have to shift gears with someone. So I guess both of those lead to really encouraging the thought, a strategic thought process around how to approach it, and then dive in and kind of get started, because it's definitely a different animal, and just starting to work through for each use case is really the best learning, I think, that we see from our partners.
I guess a follow-on question to that. You talk about the importance of aligning yourself with a partner and their roadmap. What do firms like Finicity do, I guess, in terms of making that your roadmap transparent, so that when you're talking to a new customer or whatever, that they know where you guys are headed, so that they can align with you?
Yeah, I think we've got some core competencies that we talk about, or some core tenets for Finicity as a whole, which include, obviously the consumer at the hub, the way that we think about data quality, and where do we focus across all of our product sets. And then we also expose what's just our product focus, which for us has been a lot around mortgage and lending, and also partnering for like advanced scoring and advanced analytics. And there are other firms, right, who have a focus in just slightly different areas, but leveraging similar data or technology across it.
And that was one thing also that we picked up in our research, even amongst data aggregation providers. There seems to be a lot of reciprocity and partnerships in terms of sharing underlying data or technologies. Is that correct? I mean, in my assumption there.
Yeah, I would say that absolutely is correct, and there's a growing industry standardization initiative that we participate in with a lot of other organizations in the ecosystem, which is FDX. And the idea there is to simplify data sharing and make it consistent across the board, and it's really it really forwards the industry. And it's pretty amazing to see the list of partners and, large banks, fintechs, regulatory agencies and input that are all coming together around that standardization. In other parts of the world, it's been a regulatory standardization where come down through legislation, and in the U.S. really, I think FDX is driving a lot of that and driving it from the industry as a whole. So there is really a lot of good partnership and information sharing.
That's great. So your standardization, I guess, is one thing that's coming down the pike. Where do you see this all heading? Like, what does a banking customer look like and do in the future, given the fact that they'll have access to all this data?
So a couple of things that really come to mind when I think about where this will lead us, or where are we heading. First, the data-driven decisions, real-time visibility, as we've talked about, that's just going to continue to increase. So faster decisions, consumer ability to understand, again, real time, what is their approval or status, and the lender's ability to have those kind of real time insights that are based around data-driven decisions. There's still plenty of work to do there, and it's a pretty interesting and exciting space. The standardization of data sharing, is beginning, and there's a lot of good energy around it. The industry groups are still working on the full standardization agreement on what that should look like and how everybody comes together there. Currently, there is a lot of work around data sharing agreements that are bilateral. Those are helpful in the interim, and just ensuring that that there's a partnership between the data access providers like Finicity with the financial institutions who support their consumers today with that transactional data is a really key area, and certainly an area of focus. The new financial tools products, as we've mentioned, a few that are here, but it is interesting and is becoming quicker and easier for people who have great ideas about some other application or use case for them to be able to have access to what they need in order to build those out, and continue to put forth new ideas and new product sets that benefit consumers. And then finally, the consumer themselves, which Zach, you spoke to a bit. Consumers continue to be more digitally savvy, with all of us essentially expecting mobile experiences even for large transactions, and consumers I think will continue to expect and want that. And then the really education and expansion of the way that consumers understand their own financial health, and how to improve that, how to make sure that they have a strong financial foundation. I think that is another key area is consumer permission data space really enables and leverages. So it's pretty exciting to see that more consumers understanding a lot more about the way that they manage their finances, and the opportunity to provide additional consumer education that's maybe embedded in an experience that they're having while they're transacting.
So that's interesting. One of the things that we touched upon and that brought us to cover this space was credit scores, and the fact that on the consumer side, people are. It's become top of mind for a lot of people, and understanding how credit scores impact their credit worthiness. People have a greater understanding of them, but it's not necessarily clear what you can do with them. What's happening in that space? I know you guys are working on some things there, but can you talk to us about that?
Sure. Yeah, I'd love to. The advanced scoring and the new work that's going on in that space is really, really interesting, and I think it's been really fun for us to be able to work on. There's a couple of key scoring products that are coming into the market right now. One is the Ultra FICO score, which is essentially a score that's going to allow the inclusion of information about the way that consumers manage their finances. And again, this leads into opportunities for financial inclusion and better insights. And then the second product is Experian Boost, which is the inclusion of specific transactional information into the user's existing credit file. So in both of those cases, when a consumer returns or gets a score returned or takes a look at what their score is, there are really specific, actionable, and essentially immediately actionable things that a consumer can do to improve and enhance those scores. And they're very straightforward financial education kinds of concepts, like keeping a minimum balance in your accounts, right? Increasing savings, keeping the accounts from having negative balances, paying bills on time. And so those kind of snippets of consumer education can be provided very quickly and are very understandable and digestible for consumers. So I think the credit score and credit report, which consumers have absolutely been improving in terms of understanding and education on, still has been a little complicated in some cases, and we now have an opportunity to add to that more easily actionable and understandable information for consumers about how to move themselves forward.
That's really interesting. I want to go back to something you mentioned in a previous answer, and that was about your partnerships in the marketplace. Can you talk to us about some of the ways that Finicity has partnered with other organizations and maybe some of their impact?
Sure. I think the two scoring initiatives that I just spoke to are a couple of our flagship partnerships, certainly. The Ultra FICO score is a partnership between Finicity, Experian, and FICO. So really bringing industry leaders in terms of, FICO obviously with respect to the data analytics and the scoring itself. Experian as a market leader, industry leader in terms of consumer credit reporting and consumer financial awareness, and then Finicity is leading in that in the consumer permission data space. The Experian Boost score also leverages our partnerships there. We also have partnered and focused very closely on partnerships with financial institutions. So when I spoke of the bilateral direct data sharing agreements and secure data exchange, those are partnerships with large banks to have streamline the data access, ensure data quality, and improve the experience for consumers. So we have partnerships that focus directly on relationships with large financial institutions. We also have partnerships or do a lot of work with some players in the mortgage industry, particularly the GSEs and the secondary investors, so Fannie Mae and Freddie Mac. And really, for Finicity, we view ourselves, often as a key portion to those transactions. But the ability for us to partner smoothly and innovate alongside a partner is really key to the success and being able to bring some of these new ideas to market.
That's great. And I think now I'll give you a chance to catch your breath. I think now we're going to move into the question and answer section of the webinar. We have a couple answers, couple questions, excuse me, in queue. So if you're listening and you have a question, now would be the time to ask it, or forever hold your peace. Lisa is waiting patiently. So we'll start with the ones that are in queue. So Jordan asks, will Finicity ever move into the small business market for data aggregation? The data is much more heterogeneous, but pulling the correct data together would have a huge impact on the SMB market. What can you share about the SMB market?
I would say we would agree on both points. The data is more heterogeneous. It's the small business is also challenging, just in terms of where do you draw the line on a small business, right? There's so many micro businesses, sole proprietors, and a lot of those small businesses have personal financial information intertwined with the small business. So it's definitely got its set of challenges. And we do agree it's a huge impact on small business lending and the ability to really fuel small business in this country. So yes, will we ever move into the market? Yes, we have discussions on a couple of fronts underway. And so I don't have specifics around it, but I would say agree this is another great space to be able to leverage a rich data set and to provide additional insight around capabilities for lending and other products for small business.
I guess I have a follow-on question to that. I don't need specifics about your intention to go into the SMB market, but I guess what triggers internally at a firm like Finicity to decide that'll be a market that we're going to go and attack?
I think in terms of small business is a good example of one, and this frequently happens where we'll hear it from essentially a range of different perspectives. So we have partners who are in the space who maybe are looking for expansion of their product set or the ability to use additional data. So we get it from partners. We can see, obviously industry trends and sort of what drives what's driving the industry growth. And so frequently as we head into a new opportunity space, it's not, it's a result of looking at a variety of factors across our partners and our industry in order to determine where and how to jump in. And then obviously bouncing that up against, what's our capability set and our value proposition, and do we have a real value prop to bring to some of the solutions there. So I think, as I mentioned, a couple of hurdles in terms of the data set for small business, but that's a space where we feel like we've got a lot of runway already built, and solving to those couple of additional challenges often opens up a significant amount of value as far as moving the industry forward.
Yeah, it would be hugely impactful. We have a question from Joe. What improvements are you making in the verification of income and employment, specifically payroll integration for credit unions? Very specific question, Joe.
So improvements in verification of income and employment. We are working, doing a lot of work in that space. I'm glancing at Andy because I don't think we've made market announcements about some of what's happening there. We've got new reporting underway, and we're looking absolutely at applying additional analytics to the data set to be very predictive for lenders. So we have work underway with both of the GSEs in the mortgage space around verification reporting and the automation of income validation for the mortgage process, which is a real step forward for that industry. I'm not quite sure payroll integration for credit unions. I'm just not sure exactly what that means specifically. And just the products that we're working on are really focused on the consumer permission transaction data. So if a consumer permissions their data from a credit union, then we're already plugged into that. And the transactional data often shows like payroll information. So if that's what we're talking about, the user permissioning that happens today with our current credit union integrations would really handle that. It's available today in our current verification of income report. Verification of income is not yet widely adopted for mortgage, hence our work with the GSEs.
And that answer alludes to a question Joe asked earlier in the webinar. Are the GSEs involved in consumer permission data? I guess a different way to ask is, how are they involved? And besides first mortgages, is it and home equity loans?
Yeah, the GSEs are absolutely involved in the use of consumer permission data, and we have piping for both GSEs so that the transmission of the data, again, back to real time. So as soon as the consumer and their underlying lender request it, the data set and the analytics around that are available to the GSEs. And then there's additional work that's going on on the GSE side of the house around how they want to interpret that data, what their rules, what are the business rules allowed for inclusion, and how to really think about use of that data. For example, if at Fannie Mae Day One Certainty, we've been a provider for that for over a year. And Freddie Mac's Asset and Income Modeler, or AIM product, is another example where there's work going on to be able to ingest the detailed information and be able to decision around it. And we're a provider for both of those at Fannie and Freddie.
Got it. I think we have time for one last question. I'd like to ask a personal question, and this is a question I ask of everybody that shows up on our podcast as well. What are your big audacious goals? And when I say you, it's you, your team, Finicity, for 2019.
Big audacious goals centered around. I'll just preface it. We've done a lot of work in the last couple of years, I feel like, around laying a lot of foundation. So we call it piping the ecosystem, developing the integrations and relationships with loan origination providers, the GSEs, financial institutions, and really getting all those partnerships lined up. We have been also at the same time doing investment in our product set and the nature of the analytics and reporting that are available. We now have a lot of that work done, and we are, I would say, in the next year focused on a lot of new product launch. So we're talking about advanced scoring, additional verification reporting, and providing additional insights. And that's a real big goal for us, will be to drive those products into market and really forward adoption. And as a result of putting more of those products in market and having adoption by lenders and other service providers, it really forwards what's at the core of what we care a lot about here, and that's we're back to consumer empowerment and the consumer financial empowerment and betterment, I guess.
So definitely keep us posted as those new products come into market. Lisa, it's been great talking to you. Lisa Kimball, VP of Strategic Partnerships at Finicity. Thanks for sharing your time with us. Everyone who's attended as well, thank you guys for attending. We were chatting before the webinar started, and it appears that we have people from about 13, 14 different countries around the world tuning in to hear Lisa tonight. Appreciate everyone's time. You guys are all busy. It's been great to share this information with you. And as I said in the beginning, we will be sending out, I think it's almost automatic, once we end the webinar, you'll get a link to the recorded video. We'll also write it up throughout the next week so we can chop it up into smaller bits, digestible bits. This is great. I learned a ton, and thank you again, Lisa.
Yeah, thanks very much, Zach, and thanks for the group as well for joining. I love being able to talk about where this industry is headed. It's a really fun time for fintech and for consumer permission data.
That's awesome. Good night, everybody. Thank you. Bye-bye.
Bye.